Hey everybody, welcome to episode 4 of Options Cat Stock Trading. This is Chris Tyler, and today we're going to discuss some reasons why the major indices are poised to rally strongly off their corrective lows. While it's our view Trump is unlikely to make America great again, his on-again and off-again political shenanigans have been key to make equities great again, or what I'll coin as MEGA for short, and set up a powerful stock market rally this week. So let's review the evidence for a market bottom, as well as a couple of very popular and volatile large cap tech stocks for our favored actively managed collar strategy. But first, and before we get into today's content,
it is at an all-time high and continues to go up, up, up. We want to keep it going.
there's nothing Trump likes more than bragging about the stock market as a way to keep score. Well, at least when it's up and making new highs. At the moment, though, the S&P 500, NASDAQ, and Dow, well, they're all saying Trump is a loser. The averages are uniformly trading below their post-election bullish percentage price gaps, which occurred on November 6. Also, all the major benchmarks are currently in corrections. And lastly, they're all negative on the year. That all said, and to be quite fair, there's now solid evidence technically that a market bottom is in fact in. Now on the screen, we're looking at a view of the VIX Volatility or Fear Index. 2 weeks ago, the indicator spiked up to or near very close to historically fearful levels at 30% by making highs of 29.57 in back-to-back sessions. Now, this kind of extreme reading in the VIX isn't a guarantee of a market bottom by itself, but as we can see if we look back in time over the last several years, these signals don't happen very often. And when fear does rattle investors, like it has over the past few weeks, it makes for a fairly strong buying opportunity in the stock market much more often than not. More recently, and since the fear index delivered its panic signal of sorts, both the broad-based large-cap S&P 500 and tech-heavy NASDAQ confirmed weekly chart bottoming candlesticks this past week. For its part, the tech-heavy QQQ ETF price chart, which is shown on the screen, that closed modestly inside its weekly hammer. But entering Monday, this puts the index in a solid buying position in conjunction with an oversold stochastics that's on the cusp of signaling a bullish crossover. And for the record, it's not only our opinion and one guy's simple price chart that says investors should be ready for higher market prices and the ability to make equities great again. Well-regarded market technician Ryan Detrick of Carson Investment Research recently noted on X the severity of the corrective sell-off from February's all-time highs is historically very bullish for the market. The speed of this past month's sizable correction off an all-time high has occurred in a similar way on just 7 occasions since 1950. And in each of those events, the overly bearish price action set the stage for a massive, or rather a mega rally, where the broader market was at new all-time highs both 3 and 6 months out in time. Yep, 100% of the time. Finally, and once again, we're looking at the QQQ, but this time a daily chart based on investors' business daily research of market price action. If a technically high-powered price and volume session known as a follow-through day, or FTD, signals in one or more of the broader averages this week, investors will have even greater odds confirming an intermediate term bottom and a new bull market are in fact underway. Below, I've included a link for viewers wanting additional information on the FTD signal. As the market's correction has been most challenging on growth stocks and names commonly associated with technology shares, let's look at a couple higher beta large cap NASDAQ stocks that are poised to rally, capable of producing outsized gains during a broad-based market recovery, and are smart choices for an actively managed collar strategy. Palantir, ticker PLTR, is the first stock on our radar. Despite a correction of about 40% over the past few weeks, the AI and big data software specialist shares remain up by about 35% this year compared to the Nasdaq's decline of around 7%. Technically, some of that bullish relative strength is also evident with its most recent weekly price action. Palantir has confirmed its own hammer pattern bottom inside a layered Fibonacci and trendline support zone. Now, while that's far from unique at the moment, it is a bullish notice that the stock did finish about 5% above its candlestick signal rather than inside the body like the Nasdaq's QQQ. Further, with an oversold stochastics, that's a whisker from triggering a buy signal, there's extra technical ammo to drive Palantir shares aggressively higher in the weeks ahead. On our short list of NASDAQ buys is digital currency exchange platform Coinbase, ticker COIN. Shares have shrunk in value in 2025 by about 30%. That's roughly 4 times worse than the NASDAQ's decline and more than double the losses of the crypto market's largest digital currency, Bitcoin. That all said, it's also par for the course. Coin does sport a beta of about 3.5. Due to that feature, volatile price swings that are much greater than markets should be expected. With that in mind, though, following those larger corrections, rallies in coin can also be equally powerful and highly profitable for bullish investors. Today, you won't find a weekly chart bottoming candle per se, but with the shares just signaling a bullish stochastics crossover and the stock having pierced trendline support while retracing between 50 and 62% of a 2+ year rally from all-time lows set in January of 2023 to its December 2024 intermediate high, the bulls are in very strong position to get off the bench, put together an outsized and offensive pressure on the bears, and maybe even score fresh highs over the next 3 and 6 month periods.